From AAAFx, this is Chris taking a look at Bitcoin. Bitcoin had spent most of the weekend falling, and it does make a certain amount of sense considering that if you recall back to the futures contracts being offered at the CME, what a big deal that was. And what was the first thing that happened? Well, Bitcoin sold off. Basically, what happens is institutional traders run it up, and in this case, they did it about 85, 90%, something like that. And then they hand it off to retail traders to collect their profits. The market drops, and then they come in and push it up again. And if you don't think that can happen, that's definitely going to be the case now that Bitcoin is going to be an ETF traded asset. That means it'll be easy to short Bitcoin. It's going to change the dynamic of the market completely. That being said, this has not destroyed the uptrend, despite the fact it's been a tough couple of sessions. Underneath, I see the 50-day EMA and the $40,000 level, both as potential support levels. Underneath there, 38,000 and then 35,000. The outlook of Bitcoin is going to be somewhat murky this year. I'm not one of the people who think it's going to go to 100,000. And in fact, you started seeing those videos on YouTube recently. As soon as it was pretty much obvious that there was going to be an ETF, and we've done nothing but fall since then. And it's not to say that it can't get there, but the reality is that it has now progressed into a typical asset. So we'll just have to see. That being said, if we can take out the shooting star from last week, the highs of last week, then we could go to 52,000. If we take out 40,000, then we're going to look at the 38,000 and the $35,000 level. It is worth noting that when they did finally announce a futures contract for Bitcoin last time, that was the very top. I don't think that's the case here, but I do think at the very least we probably need to spend some time kind of sorting everything out.